So let's get going here. All right, so here we are today. We made a new 10-day low. We had seen a support level tucked inside this pocket. We said the trend was downward because the PSAR had flipped. The PSAR was sloping down. The RL30 had started to roll over. The RL10 had crossed the dragon, and it was running into resistance at Z1, and that the next likely, a reasonable next likely move would be back to the Bollinger Band mean to test what had been previously the 10-day low, then the Bollinger Band mean, and then en route to Z2, and then the belly of the dragon and fair value. And so we said that move could look very much like this, because that's what that move looked like. And we said this was leg one down. This was leg one down. And so any failure below the low of the day could be the start of a second leg down. And what we got was a significant gap down, one short bump, and then nothing but selling pressure all day until the last couple hours, when there was a 50% retracement back to the Bollinger Band mean. So we had a move from 343 down to a new low at 335.5, and that's a $7.5 move on 340. That's about 2.2%, which is about 1.5 ATR of downward directional move, and then about a 1 ATR bounce off the bottom. So created a new 10-day low today. Closed right at the Bollinger Band mean. And that price is 5.29% from that previous all-time high, swing high. There's the 5%, so we're at 5.3. This is what a 10% sell-off looks like down here at Z2. And so if we have another move tomorrow like we saw today, that thing could definitely get down to the long-term fair value and the previous peak fair value. And certainly, and that puts the dragon belly in range tomorrow. To the upside, it has to get back to take out today's high at 343, which is basically the southern skin of the dragon, then the spine of the dragon, then the peak or the upper skin of the dragon, and then the peak of the dragon. So we got those four price levels to contend with. Lots of resistance in there. It's not until we get above the hump of the dragon that we can say this would be any good. So today really reinforced the downside pressure, and just about everything was bad today. That kind of move is perfectly suited for the hybrid frog. So let's see what worked today. We'll start with the upside and the U.S. indices first. So we have the S&P was off 1.85%. The Russell was off 2.16%. Diamonds were down 2.24%. So that's really bad when the great big bellwethers are suffering the most. Treasuries gained a percentage to bring us back almost to that key 160 level, up 0.93%. The sectors that did better than the S&P, so you got silver, the FANGs, Wheaton, and emerging markets all around this about 1.33%. You had healthcare in Japan down 1%. The only things in the green today, Brazil at 0.25%, Treasuries at 0.9%, and then the VIX, the volatility, up 9%. So there's more coming. Amazon and Apple were flat for the day, as was Tesla. Tesla was up about another % from there and gave back grudgingly. Had a nice intraday move for the Agile. Other bellwethers, Procter and Gamble and Walmart resisted the sell-off better than most. But that's about it for the good news. Bad news is everywhere else. So the S&P down 1.8. Got Mexico and consumer discretionary off about 1.9. Tech down 2.2. Finance 2.25. Materials 2.5. Oil 2.75. Clean energy 3%. Simon Property Commercial Real Estate 3.25. Energy 3.5. Oil exploration 5.3. Now the triple techs took it in the shorts today. TQs at minus 4.56, and the broad tech sector minus 6.5%. Big percent losers: Nikola down 7%, Devon Energy almost 6%, Virgin Galactic and Wind down 4%, Boeing and Nucor 3.125%. So basically everything got slaughtered today, with just a few notable exceptions. So that makes the exceptions very noteworthy: Amazon, Apple, Tesla, Procter. So let's be on the watch for what they can do tomorrow. Here are some of the morning trades in the usual way. So this is Wheaton Precious Metals. And this starts off, in my view, what looks like a shakeout to see what kind of inventory they could get. So it was a fairly big gap down, and then immediately reversal on heavy buying pressure. Takes out the previous VWAP. My entry is here with a stop below the RL10 in the usual way. I considered adding another position right here, but I was content with just the one. But this would be the place where you could or should consider. That's also where the Wu-Wei exit would be filling in, because your entry is here. So this is 1, 2, 3 dots above. This is about where the Wu-Wei exit picks up. And then I took half on the sniper and half on the managerial exit. I felt like I gave too much back on this one. That's quite a lot to give back here. But it was still reasonable. I did not play the reversal. This would, if we were playing the reversal, if you were very aggressive and we're, trading in and out of this one, just to point out COTA 2 every time I see it. You have a swing high, a swing low, a lower swing high, and then that makes that would give you a pocket short in the yellow or a collapsing dragon at that yellow. So either one of those would be a legit entry. You wouldn't lose money on that trade because of this Z3 excursion. You'd probably end up getting out about where this SFC kicks in. This is just a standard kata number 1. You have a harsh winter. Winter rolls over into the spring, crosses the dragon, Pisar flips. You buy it with a stop at the Pisar, and that's just a nice capture. And this time I was a little more aggressive, making the gains there. In retrospect, it was sad that I didn't make this play here. But again, you can see a collapsing, a supported fall crossing here. You would see a collapsing dragon here, another pocket here. This might have gotten you in as a collapsing dragon there as well. I didn't play the downside because everything was getting murdered, and I was wanting to play the defensive play here. I thought hard about this one. If I'd have taken it, I probably would have ended up scratching, but I didn't have the will or the attention at that moment. I did play this supported spring crossing here. I like that one a little better because it gave more evidence of support. Because you have this very solid level of support for almost 20 minutes, and then that's finding support basically where this found support over here. So if you take this as a higher low, now that makes this entry a little more easier to tolerate, and you could either be on the sniper with the Pisar dots or the managerial exit, and you won't lose money on that trade. So that was wheat and precious metals. This one was just an orderly move inside DIA. This is just kata 1. So this was a big gap down, started collapsing, so I got short here. It gave like a sell-off and then a reversal right away. So that felt like a collapsing dragon or a hybrid frog, take your pick. It failed to fail further, and when it got back to break even and approaching VWAP, I just scratched it. It then gave a Z3 pinch. As you can see, this is the range compression from the previous day. So you can see we got a Z3 pinch there. So now this is now a collapsing dragon because it takes out the previous belly. So there's a collapsing dragon. Here's the second entry, collapsing dragon. Third entry, and I ended up scratching here because we got a low and a higher low. So you have this low, and you have a higher low, and that was enough. But the Dow was considerably lagging everything, and I did consider this as a potential in here. I wouldn't be offended if you took that, with the idea being that you want to capture the VWAP. It ended up making that move. I just didn't have the will for it. Later in the day, this is going into the lunch period. So this is the volatility ETF, and just there was this great big consolidation zone in here with a Z3 pinch, and this looks like a fake 1 go to. This is a kata number 2 right here because you have a low and a higher low, and that makes this that would make this a very reasonable entry right here. And if you don't take that one, then when it turns back into the summer and takes out the previous hump of the RL10, then that's the emerging dragon entry, and then your sniper is probably here, and your manager is right there. Then this one is also a reasonable upside play because you have a low. Oops, you have a low and a higher low again. And again, you won't lose any money on that trade. So the volatility one, it's hard. You can't really short that one on grinding upward days. It just doesn't have enough room. But on this kind of a day, this is a good tell, and it's also a good trader. There were some opportunities back in this thing over here as well, with tight stops in here. So VXX was certainly tradable today. I wanted to share one from Joe Londino, and this is trade frame he did and executed in SQQQ. That's the ultra inverse Qs, and he noticed so he's got the frog box mapped up. He's showing a low, a double bottom, and starting to take off. And so he ends up getting it at the crossing of the RL270 and the VWAP with a tight stop here at the PSAR. And he gets leg one. He's using the Wu Wei exit. Here's where he gets it into the Wu Wei and no lose plus dinner for two. And he waits for the Bollinger Band mean to catch up. Then he plays it up. He takes half here with the sniper. He stays in with the other half because of the daily chart, the VIX and risk Z and the SQN, and the range is already larger than normal. So he knows that there's a potential second leg up. He re-enters on the breakout of the pinch. He adds back the half that he took the exit here. He adds it back here, and now he's able to stick around for the second leg up, which is basically the size of the first leg up. And he gets a 1, 2, 3 exit, and he sells 3/4 with the sniper, and then he sells the other quarter here with the remainder and locks in better than 2R. So just perfectly prepared, perfectly played. And then cash overnight. No sweat. All right, next up, we're going to shift to the daily. Try to get through this one here. Ugh. And let me let that come up on your screen real quick. Boy, still got to get my steps in tonight. Been teaching since 8 this morning. Boy, Mondays are always tough. All right, let's get that summary dashboard up here. Come on now. There we go. All right, so we are still in bullish normal, but you notice that we got slaughtered today on the NDX for the 3-day and the 10-day, so we're below zero on that one. And only the very long term remains overbought. We're still in risk off conditions. How good is that indicator about warning you about potential and then being ready for downside moves? I mean, it just is. It just is. ADX is a weak 13.5. and the ATRs came back above 1.5 to close at 1.56. Now we've got some overreaction signals here in the Dow, the Euro-Asia blend, and the European 350, and then we've got channeling firing on the Qs, EFA, and also IEV. So under normal bullish conditions, that would be like an auto buy at the open tomorrow. So we got to be ready for the possibility of a sharp recovery. Now that we went past the 5% trigger today, that would be the natural place for the plunge protection team to start buying, and people trying to stabilize, but also people looking for quality on sale. And that's why I think looking at things that did less worse today, like Procter, Tesla, Brazil, Walmart, those are ones to keep an eye on for tomorrow. But now you see the techs and the Qs both in that posture. The 10-day min pains are the ones that have sold off the least. So that would be a reasonable set of targets to consider if there's any sign of strength tomorrow. And then the ones that sold off the most today are the ones to be ready to get short on signs of further weakness. So Intel, IBM, Salesforce, American Express, and Apple. So 4 out of 5 are tech. And the tech is old school, with the exception of Salesforce. Intel, IBM, and Apple, that's old school tech. And then the energy sector coming in for some grief here. Plenty of channeling signals to choose from. Lots of NDXs that fired exceptional breakdowns. Lots of auto framers, better than 2 to 1. I notice Apple basically flat for the day. So that's actually a healthy thing. And Procter and Gamble only down minus 0.6. So Procter's always interesting to me. Big breakdown continuing in Intel after last week's 10% sell-off. No surprise there. Piling on the weakness. In the ETFs, only one doji, and that was in silver. Otherwise, plenty of channeling and overreaction. So this is a market condition, not an individual symbol condition. Lots of 10-day breakdowns as well. The biggest one was in oil at minus 39. And a pretty good number of auto framers that test out well also. But real weakness today in energy. And then the defensive plays of utilities, treasuries, gold, and silver today. The auto framer is up next, and as you would expect, there's plenty of good symbols and good frames to be built in here. So, Intel, because it's been smashed so much, real estate and treasury still offering good rewards. Technology sector itself, that would be one that I would prioritize for the long side for tomorrow, to be ready for that one. And also, I think Apple at 2.5 to 1 risk to reward. The S&P, Procter, and Microsoft are in there as well. Not quite 2 to 1, but they made it onto the list. Daily squeezes, there's only 2, silver and gold today, and that was because of the very large size of the daily range, so that's going to make it difficult to find something that tests out well when today's range was also very large. So you're not going to get that kind of, you can't use like the range risk and still expect to get 2 units of reward for that. So the hybrid frog is a possibility, but you can't use the, the daily squeeze setup for that. Fall is dominating now in the MACD seasonal 4 seasons. Only a couple things in the summer tend to be non-techs. So you got Brazil and Latin America in the summer. Then you have some McDonald's, Goldman, and Travelers. Last one I want to look at, just the, you can see just how broad-based and painful the selling was today. So many things broke down on their 10-day and 3-day. Big losers today. Cisco got smashed at a minus 120. The diamonds were down at minus 78. And treasuries had a big day at plus 145. Verizon is one of the few, well, the only Dow component that's in the green for the 3 days still. So that's holding its value better than most. All right, so that's everything I want to cover today. We started late because of the late soccer association meeting, so I want to give you time to get your stuff prepared for tomorrow. Tomorrow should be fireworks right from the opening, right from the get-go. So let's be ready. Get your scenarios built for sharp, big gaps, and then a sharp move in either direction. No matter what direction the gap is, you got to program that for a big move in either direction once it opens. So remember that the big gap does not predict the size. It does not predict the direction of the follow through, and we're only at a 5% sell-off. So there's still another 5% of wiggle room for people to scare this market. That would be the path of maximum pain. So that would be the least surprising move. Would be gap down, harsh sell-off, and then a sharp intraday reversal on a Tuesday. So I will be prepared for that one. Okay, that's everything I got for you guys, and we're off to see the wizard with the doggies. Take good care.